Today's headlines reveal significant shifts in the cryptocurrency landscape, including the anticipated Senate vote on the major Clarity Act. Additionally, AlphaPepe's presale milestones and Bitcoin's price predictions are making waves. Here are today's top 10 stories you need to know. In recent developments, Bitcoin's price prediction has reached a new high of $250,000. This forecast is driven by increasing institutional adoption and growing interest in exchange-traded funds. Analysts suggest that Bitcoin is breaking away from its traditional 4-year cycle. As institutional investments begin to flow into the cryptocurrency market, many believe this will stabilize and potentially increase Bitcoin's value. The historical volatility of Bitcoin has always attracted attention, but this time, analysts are more optimistic. The anticipated rise is also influenced by the overall bullish sentiment surrounding cryptocurrencies. This change in perception could lead to greater integration of Bitcoin into mainstream financial systems. Investors are keeping a close eye on these developments, as they could reshape the investment landscape. Looking ahead, we could see Bitcoin reaching new heights if these trends continue to develop positively. The AlphaPepe cryptocurrency project has successfully hit a presale milestone of $1.18 million. This accomplishment comes as the project enters stage 16 of its presale, with tokens priced at $0.1683. The holder count has now surpassed 8,500. This rapid growth has garnered attention, especially with the demo of their AlphaSwap AI decentralized exchange exceeding 3,000 active users. The completed 1010 block SAFU security audit adds another layer of trust for potential investors. AlphaPepe's upcoming launch is generating excitement as it prepares for its exchange debut in Q2 of 2026. With the cryptocurrency market being highly competitive, AlphaPepe's strong presale performance may set a precedent for future projects. The sustained interest in this presale reflects a larger trend of investor enthusiasm within the cryptocurrency space. Moving forward, the project's performance in the exchange could significantly impact its market standing. Ethereum's price prediction is currently set at a target of $7,500. This forecast is buoyed by the growing institutional interest in Ethereum, alongside its utility in various decentralized applications. As the second largest cryptocurrency by market capitalization, Ethereum's performance is often seen as a bellwether for the larger crypto market. Institutions are increasingly recognizing Ethereum's potential for smart contracts and DeFi applications. Analysts believe that sustained demand could push Ethereum's price even higher. The recent surge in NFT activity has also contributed to this optimism, as it utilizes Ethereum's blockchain technology. Investors are keenly monitoring market conditions, as any fluctuations could impact Ethereum's trajectory. The upcoming developments in Ethereum's ecosystem, including upgrades and partnerships, could further enhance its appeal. Looking ahead, Ethereum's adaptability may allow it to capitalize on emerging trends in the digital asset space. The Senate Banking Committee is set to vote on the Clarity Act, a significant piece of legislation aimed at regulating digital assets. This bipartisan bill seeks to amend existing banking laws to facilitate the use of digital currencies and blockchain technology by banks. The act comes at a time when the cryptocurrency industry is calling for clearer regulations amidst its rapid growth. Proponents of the bill argue that it would provide much-needed clarity and safety for both financial institutions and consumers. The Act's passage could pave the way for greater institutional adoption of digital currencies and enhance their legitimacy in the financial landscape. However, there are also concerns from traditional banking sectors regarding potential impacts on existing frameworks. If passed, the Clarity Act could transform the way banks interact with cryptocurrencies. As the vote approaches, stakeholders are anxiously awaiting the outcome, which could shape the future of financial technology in America. The push for comprehensive cryptocurrency regulation in the United States is gaining momentum. Recent discussions among lawmakers have highlighted the necessity for establishing clear guidelines for digital asset usage. The bipartisan support for the Clarity Act has underscored the urgency to address the regulatory gray areas that currently exist. As cryptocurrencies continue to evolve, so too does the need for frameworks that protect consumers while fostering innovation. Financial institutions are closely watching these developments, as regulations could impact their operational strategies. The involvement of major financial players in lobbying for clarity indicates a significant shift in perspective. This regulatory evolution could lead to increased trust in the crypto market, encouraging more investors to participate. As more details emerge, the potential for a structured regulatory environment may become a game changer for the entire cryptocurrency industry. Looking ahead, the outcome of these discussions could determine the future landscape of digital finance in the United States. Crypto market volatility remains a significant concern for investors around the globe. Recent fluctuations in major cryptocurrencies, including Bitcoin and Ethereum, have left many traders on edge, with Bitcoin briefly dipping below the $30,000 mark. This volatility is driven by various factors, including regulatory news, market sentiment, and macroeconomic conditions, such as rising interest rates. Investors are advised to approach the market with caution, as rapid price changes can result in both significant gains and losses, often within a single day. The unpredictable nature of the crypto market has led to increasing calls for better regulatory oversight to enhance stability and protect investors. Experts suggest that understanding the underlying factors behind price movements, such as technological advancements and institutional adoption, is crucial for navigating this complex landscape. As the market matures, there may be hopes for a more stable trading environment. However, until clearer regulations are established, volatility is likely to remain a defining characteristic of the cryptocurrency space, making informed trading strategies essential for success in 2024. Recent analyses have revealed significant movements among cryptocurrency whales or large holders of digital assets. These transactions often serve as precursors to market trends and potential price fluctuations. Historically, when whales transfer substantial amounts of Bitcoin or Ethereum, it can trigger rapid price changes, stirring both excitement and anxiety among smaller investors. This behavior underscores the critical role that whale dynamics play in shaping the broader cryptocurrency landscape. Furthermore, the heightened scrutiny on these large transactions raises vital questions about market transparency and the need for regulation. Observers are now closely analyzing the implications of these movements, as they can indicate either growing confidence or lurking concerns among major players in the market. The impact of these shifts is not merely theoretical, they can lead to significant volatility, affecting countless investors. As the cryptocurrency market continues to mature, understanding whale behavior will be essential for informed investing. Analysts will likely focus on these movements to predict future trends and gauge the overall health of the cryptocurrency ecosystem. Institutional adoption of cryptocurrencies is on the rise, with major financial institutions actively exploring digital assets. This trend signifies a profound shift in the traditional financial landscape, as banks and investment firms recognize the transformative potential of blockchain technology. In recent months, reports have emerged that leading firms, including Goldman Sachs and JP Morgan, are developing comprehensive strategies to incorporate cryptocurrencies into their portfolios. This growing interest is largely driven by a search for alternative investment opportunities and a desire to engage with younger, tech-savvy investors. Additionally, institutions are keen to capitalize on the increasing demand for digital assets among retail investors, who are increasingly turning to cryptocurrencies as viable investment options. As institutional involvement deepens, the legitimacy of cryptocurrencies is significantly enhanced, paving the way for wider acceptance across various sectors. This shift not only impacts the crypto market, but has the potential to reshape traditional finance by introducing new products and services. Looking ahead, the continued integration of cryptocurrencies into institutional practices may redefine the future of financial services, fostering innovation and creating new pathways for investment and growth. A significant cryptocurrency bill is scheduled for a pivotal vote in the Senate Banking Committee today. The Clarity Act aims to provide a comprehensive framework for the regulation of digital assets, allowing financial institutions to leverage blockchain technology more effectively. This bipartisan effort reflects a growing recognition of the importance of clear regulations in the rapidly evolving crypto landscape. The rise of cryptocurrencies has created both opportunities and challenges, with many investors seeking protection against fraud and market volatility. Supporters of the bill argue that it will enhance consumer protection and promote innovation, addressing concerns that have long plagued the industry. Critics, however, express fears of potential overreach, worrying that excessive regulation could stifle growth and hinder technological advancement. The outcome of this vote could shape the future of cryptocurrencies in the United States, establishing a regulatory environment that either fosters growth or imposes restrictions. If approved, the Clarity Act could set a precedent for how digital assets are treated by regulatory bodies, influencing similar legislation worldwide. Stakeholders from various sectors are closely monitoring this development, as its implications will be felt across the financial ecosystem and could redefine investment strategies. The crypto community eagerly awaits the results, anticipating a transformative shift in market dynamics. The cryptocurrency market is on the brink of significant regulatory changes as the Senate Banking Committee prepares to vote on the Clarity Act. This proposed legislation aims to establish clear guidelines for digital assets, enabling banks to engage with cryptocurrencies and blockchain technology more effectively. For years, the crypto industry has grappled with a confusing landscape of regulations that vary from state to state. The bipartisan support for this bill signifies a crucial moment for the crypto industry, which has long sought clarity amidst this regulatory patchwork. If passed, the Clarity Act could provide a much-needed framework that fosters innovation while ensuring consumer protection. This legislation is particularly important as the market has seen explosive growth in recent years, attracting both institutional and retail investors. The implications of this legislation extend beyond just the United States. They could set a global standard for how countries approach cryptocurrency regulation. As the vote approaches, industry stakeholders are considering the potential impacts on market dynamics, investor confidence, and the overall legitimacy of digital currencies. Should the bill pass, it may usher in a new era of acceptance for cryptocurrencies within traditional financial systems. The outcome of this vote will be pivotal in shaping the future of the cryptocurrency landscape, potentially leading to increased investment and participation in the digital economy. Thank you for watching our recap of today's top stories. Which of these developments surprised you the most? Don't forget to like and subscribe for more updates.